In this video, we are going to talk about cryptocurrency in 2022, so before starting this video, please like this video, and subscribe to our channel for the future updates. The global economy is recovering from the effects of the COVID-19 pandemic, and this trend will continue in 2022. To say the least, the 6% global GDP growth forecast for this year has been maintained. Preliminary forecasts indicate that growth will remain at roughly 5% next year, unless there are fresh surprises. However, since this is an average metric, the rates of economic recovery in specific countries will have an influence on the exchange rates of their national currencies. The Euro-USD pair has exhibited a very different vector behavior since the outbreak began. After starting at 1.0635 in March 2020, the pair was already at 1.2350 in early January 2021. The dollar's depreciation has been driven by the U.S. Federal Reserve's monetary stimulus (QE) policy of continuously pouring money into the U.S. economy. With the start of a new year in 2021 and the inauguration of a new president, Joe Biden, the market has a feeling of enhanced stability in the anticipated winding down of QE. Even more so, given the good macroeconomic indicators, such as inflation and labor market revival. The dollar had gained momentum by the end of March, and the Euro-USD pair had dropped to 1.1700. The Fed's leadership, on the other hand, was in a dovish mindset, and the economy continued to be pumped with money. The end of the quantitative easing program was postponed indefinitely, and no one could even contemplate raising the base interest rate. The pair then broke beyond the psychological barrier of 1.2000, hitting a high of 1.2265. The battle between Europe's central banks and the United States central banks was far from over. While the ECB's tone remained dovish, some Fed officials' comments had already shifted to a hawkish tone. Investors started to anticipate the Fed to start unwinding QE at the end of this year, with the objective of wrapping it up in 2022 and raising the discount rate in early 2023. The dollar recovered some ground, pushing the pair back to 1.1700. During its September meeting, the American regulator made no specific plans to reduce the monetary stimulus program. The Fed, on the other hand, will be 6 months ahead of the ECB, assuming decision-making dynamics remain constant. As a consequence, many experts anticipate the dollar will continue to rise in late 2021 and the first part of 2022. In this case, the pair will continue to fall, first to support 1.1500, then to 1.1200. Some ardent bears anticipate the pair will fall to new lows in March 2020. Gold cryptocurrencies, both virtual and real. While the primary currency pair Euro-USD has a broad understanding and political and economic justification for expectations, cryptocurrency looks to be much more perplexing. Despite the promises of influencers, this market looks to have been more of a hotspot of mass speculation than a reliable investment platform in the previous 1 to 1.5 years. Despite the fact that the year is not yet out, Bitcoin has already surged from $28,550 in January to $64,800 in April, before falling to $29,300 in July and surging again, although on a smaller scale. Not only can measures taken by US authorities and the Chinese government influence the BTC/USD rate, but so do Elon Musk's emotions when he wakes up. One of his tweets has the ability to make you a millionaire or tear you apart. That is why, even if they do not possess a single coin, the NordFX brokerage enables its customers to benefit not only from the growth, but also from the fall, of cryptocurrency prices. Why take the risk of buying Bitcoin just to sell it later? After all, you may initiate a sell transaction right now. Nobody knows how much the reference coin is worth. Expert viewpoints vary significantly. Some predict $100,000 by the end of this year, such as Standard Chartered, while others predict $100,000 by the end of 2022. Some experts, like Nobel laureate Robert Shiller, fear the bubble will burst soon, burying the $2 trillion or more that investors have invested. The rate at which the U.S. economy recovers, the rate at which the quantitative easing (QE) program is phased out, the possibility of the Fed increasing interest rates, and the dynamics of Treasury yields will all play a role. These are the kind of factors that might reduce institutional investors' risk appetite and force them to seek out safer financial solutions. The Standard Chartered analyst's outlook for Ethereum is just as upbeat as their outlook for Bitcoin, and it seems to be quite optimistic. A price range of $26,000 to $35,000 per coin was mentioned in an interview with Reuters. Even if the Bitcoin price hits $175,000 by the end of 2022, that isn't the top limit. According to a study released in Forbes by Goldman Sachs, the traditional cryptocurrency has the potential to lose its supremacy and give way to Ethereum. According to Goldman Sachs, the major altcoin's attractiveness stems from its ability to create new applications. The fact that its platform may be used to replace a variety of financial products is also a benefit. This includes loans and other banking operations. For example, many analysts believe that physical gold, rather than digital gold, will have more growth potential in 2022 than it does today. They don't rule out the potential that the ZAO-USD pair would break the previous high of $2,200 to $2,300 per ounce achieved in August 2020. However, as previously said, the willingness or inability of investors to take risks will decide the price performance of this reserve asset. What do you think of our video? Let me know in the comment section below. If you enjoy this video and want to hear from me again, be sure to hit that subscribe button before you go. Thanks for watching.